Right then, hello everybody. Welcome to today's live trading session. This is Adrian speaking. Hopefully the sound is coming through loud and clear. We should be all streaming, all operational and working. If you can hear me, please do let me know. Just type hello into the questions box. If you're listening to us on GoToWebinar, just use the questions box. I'm sure you're familiar with that already. Or you could watch us, maybe watching us on Facebook, maybe on YouTube, all sorts of different stuff we're streaming on today. And there's lots of really good stuff to go through today. So if this is your first time, one of the things you won't know or may not know is what on earth do we talk about in these sessions? Well, I'm Adrian. I'm the head of trading here at Trendsignal. We have our own system and trading strategies that we teach and provide to home traders so they can trade for themselves. Now, the purpose of these Trendsignal live sessions is to go through these opportunities, to talk to you about the ones that are setting up today, right now. So these are the trades that are setting up, looking like opportunities for tonight. So we're not necessarily placing them now. We're going through some live analysis. We're looking at the ones that are setting up with a view to placing them using the system tonight. Okay, so we're going to look at three different systems today. There'll be the Trendsignal Plus system, which is Forex, the Momentum Stock system, which is stocks, and Complete Crypto Trader, which is cryptos. Okay, so today, 19th of April, we're going to be looking through a vast number of opportunities, and we're going to look at some real good actionable stuff that's setting up on the markets right now as we speak. Okay. So let's crack on with it, shall we? Just a quick note, we do need to do a bit of a risk warning. Spread bets and CFDs are complex instruments that come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Past performance is not a reliable indicator of future results. Trendsignal is not regulated. We don't need to be. We cannot be regulated for providing investment education, and we are not an advisor. So any decisions you make are your own, and make sure you're comfortable with the risk associated with those. Okay, so let's get on with it. FX, Forex, stocks, cryptocurrencies. Let's start straight off with on the Forex side, and we'll go into what's setting up there. Now, the first thing I want to do, everybody, is talk about some recent opportunity. This is one that we've had on for a little while. It's just hit target today. Now, all I really talk about in these sessions is trades are setting up today, and I like to just pick up on the opportunities we've called in previous Tuesday sessions. So there's loads of other trades that take shape, but this is only the ones that take place on Tuesday. So 2 Tuesdays ago, it's quite a long duration for this trade, but we had a number of Forex buy trades, some really decent trading opportunities, some Aussie pairs, some New Zealand pairs. Three of those 4 trades on that sort of that wave, if you like, hit target within a few hours. Aussie yen didn't, and what actually happened here is the market just went pretty much sideways for a couple of weeks. It's just burst through that level, and we've actually hit target. We had no reason to exit the trade earlier, so there's no what we call an active stop. It didn't hit our stop loss, and it's now gone through and hit our objective. And just so you've got an idea, the tools that we provide, we've got a scanning tool, we'll have a look at that in a second, but this TradeMate tool can help traders with an idea of what's the most likely scenario for this opportunity. Now you can customize it with a different choice of stop loss, and you can customize the target. What we recommend for new traders is what we call our starter limit. So the starter target for this trade on Aussie yen was 94.16. So on day one it got to about 94.12 and then came backing off. It's gone bursting through that number, so it's just over a 50 pip winner. So it's a decent move ultimately for us. Yeah, we had to sit on it and wait for it a little while, but it was a good one. And hopefully some of you guys took that opportunity. Hopefully those that did, all of you made a decent profit on that one. So let's have a look at what else is setting up on these markets right now. Let's run the scan and let's get into it. Okay, so let me just bring in my scanner there, and I'm going to be looking at the D1 sniper strategy. I'm going to do a 2-bar look back just so there's a few things that we can look at. That effectively means these opportunities that have a 2 against them, so like pound CAD number 2, that means this was an opportunity that's set up on the previous trading day. So in this case, Monday. Now, the ones are the ones that are setting up for today. So we've got pound dollar setting up for today, and we've got Aussie Swiss setting up for today. Let's have a quick look at yesterday's one, and let's see how we'd look at that one, whether we like it as an opportunity and so on. Now, this was pound against the Canadian dollar. Let's have a quick look at context. That's what I want to do in these charts here, in these sessions. Let's have a look at what we have here. Now, statistically, the favorite turning points, the favorite trading opportunities are filters. Our favorite filters for identifying the best trades are identified by or marked out by these discs. That's what the system does. Helps us to identify. It applies the filters automatically to the charts to find for us our favorite, our highest probability setups. Those have historically produced the best opportunities, and then we can use tools like TradeMate to determine, again, based on probabilities, how we should manage that trade. So as an example, this opportunity from last night, so that was Monday the 18th of April, what was the target? 163.63. The market actually went below there, down into about 163.45. So it's a nice winner, not a big one, but that's often what we're looking for. Bite-sized objectives, looking to take that income out of the market ultimately, and a decent profit there. And this is the sort of thing. So whilst that Aussie yen trade from earlier, that was on probably for 2 weeks, well, exactly 2 weeks, this one has only been on for 1 day. So it's typically, that's your broad range there of opportunity length. So you're often in trades between 1 day and 2 weeks, as you can see there. So that one's already done, all right? Let's have a look at the ones that are setting up. They're, of course, not done. These are opportunities that are setting up now. We'll have a look at them again on our own systems, on our own home computers tonight, with a view to placing those trades. But the purpose of this is to go through the ones that are setting up. You can have a look at them, you can follow them, you can see what's going on with them. We do a recap video later on in the week on social media, and you can follow those as well. What I want to do is give some live analysis on Aussie Swiss. So Australian dollar against the Swiss franc. This is a daily chart. Why are we interested in this one? Well, what we can see here is that this market is putting in one of these sniper discs. That makes it, on a statistics basis, a pattern that has historically produced, good trades, good results, good profit opportunity. What's behind that? The filters that are behind those snipers are things like intermediate trends, weekly trend, the monthly trend, the degree to which markets are overbought or oversold. Looking at this line here, ascending, descending candlestick patterns and chart patterns. There's a great number of factors that are programmed into these snipers. Now, the best performing patterns are earmarked by one of those discs. We see one here, we see one that is setting up on today's daily candlestick. That means it's an opportunity setting up for tonight. Why have we got a sniper there? Because the hallmarks are there to suggest that this market is in an uptrend. And if the market's in an uptrend, we would be better off focusing on buying trading opportunities rather than shorts, which are likely to be small. Okay, the probability is a small pullback followed by a bigger move to the upside. Okay, so therefore it is arguably safer to look for the buying opportunities. I mean, you can see that's the case there anyway, that big moves up, small move down, like 1 bar, small move down, no sniper on the downside because it's a low probability setup. And now we're going to go up and we're looking for the market to move to higher prices. Okay, so let's have a quick look in terms of TradeMate and then my own view on this as an opportunity. So TradeMate here, there's a buy, it's an ascending chart pattern. It's quite an interesting opportunity. Take profit level of 70.36. What I look at here are these 2 pivot points. The line here, the line here. I'd like my target inside, just slightly inside that line. You can see that one there at 70.42. It is my sort of probability-based or maths-based statistical level, 70.36. That's what I'm interested in as an objective. So I quite like that as a target. Stop loss, just going to go below where the market's been today. Okay, so if the market or if the chart looks like this tonight, then I'll be pretty happy to take this as an opportunity. From a candlestick perspective, what are we seeing here? We're seeing a low, we're seeing a low, that's a higher low, you're seeing a high, you're seeing a higher high. You're seeing a market that is ratcheting its way up. So there's nothing at this point to tell me that this market is looking to buck that trend. The weekly trend, the monthly trend are all positive. The blue line here suggests a positive intermediate trend. In other words, that's the direction the daily chart is going. All of this is programmed into that sniper disc. Okay, so the right patterns all go into that melting pot of information to provide us with an output. And that is effectively suggesting to us that this is what has historically been a repetition of a consistently highly performing pattern. Okay, and that's the way we're going to look at it. So fundamentally, it looks good from say technically it looks good, and we want it just inside that resistance level, that dotted line from there. So 70.36. Let's move on. Hopefully that's all okay. We also have pound against the US dollar. That's also setting up as a sell trade. And you might sit there and think, well, gosh, it's really quite low down. We're looking to sell a market that's quite low. Yes, it is. Just tighten up the chart a little bit. It has fallen a lot. But ultimately, this is a market that is in a downtrend. So the Aussie Swiss was an uptrend. Pound dollar is like this. That's the way this market's going. Arguably, what we've got here is the market that failed to make a new high. Now it's starting to rotate back down again. The sellers are starting to take control again. The question is it going to break to new lows? Is it going to push further down here? It's looking attractive at this point. Technically, just based on the trends, the chart patterns, the candlestick patterns, it's looking like a decent trade. Now, when we analyze the chart visually, we can add an extra layer of analysis to determine whether it's a trade we'd like to take. What I want to do is look at what happened the last time the market was down at this level. So 130.00s. There's two things here. Number one, that's a round number. Markets can be a bit fickle about round numbers, so it's a bit of an odd thing. So will there be support off 130.00? Yeah, maybe. It does happen, believe it or not. I know it sounds odd, it sounds a bit strange, but it does happen. What we've also got here is the market found support off that number here, and it found support of that number here. So it's possible that there's a big institution looking to buy pounds at this level from his dollars. So that's the reason why the market held here and why the market held here. So it's possible that that support could hold. So what's the risk to this particular trade? Let me change my pen color here. The risk is we could be selling right on a major level of support. The market failed to bounce off it, so to go through it here. The market failed to get through here on 4 separate days and on 2 separate days here. That means that there's a bit quite strong support brewing here. So what do I think about this opportunity? I think that at this level, it's a little bit risky. I think that I would prefer to sell it at a slightly lower price. I would prefer to be selling it down around that sort of, a close below. So if we're closing and we're trading below 130, so in other words, like 129.95, something like that. So a little bit below. If we can take out the low here and the low of that bar, so we can sell it at a slightly lower price, this will be the lowest close that it would have seen over the last month or so. That would suggest a continuance of selling, i.e. the sellers are in control of this market. That's what I want to see. I want to see the sellers in control on pound dollar, not the buyers in control on pound dollar. Do you see? So I want to see just to see that entry, the day to finish out down around sort of here. Then I'm going to be much more interested in taking that opportunity. Okay, I know it sounds kind of weird. A lot of people think, oh, you want to sell or short at the highest price possible. You want to buy at the lowest price possible. Not really. The trend is your friend. You want to buy high and sell it higher. You want to short it low and buy it back lower. That's really the way a trader should be looking at the markets, really. Okay, everybody, is this making sense? Give me a quick yes or no in the questions box just to make sure we're all still on the same page. I say, I'm happy enough with it as an opportunity. I would prefer just a little bit more weakness to help propel this market to new lows. Okay. Good. We seem to be okay. Fantastic. Thank you. So that's pound dollar. Let's move on. There's one other Forex market that I want to have a look at, which is dollar CAD. Now, I'm not going to spend ages looking at loads of other stuff, but there is one other market I want to have a look at and review. So dollar CAD, it's actually lifted a little bit here. I'm bringing it up because just half an hour ago, prices were down here actually. The market's lifted up quite a bit in the last half an hour. So it doesn't look quite the same now. But what we were seeing was a red indicator there. We're seeing the market starting to break back down. There was no sniper there. But again, contextually, if the market's going to fall, so keep an eye on it in this zone, dollar CAD. Why should it fall from here? Well, the sniper does a lot of that hard work for us, but that's not every trade that has a sniper. What we can do, let's just tighten the chart up. Let's have a look at what's happened the last time the market's been at those sorts of levels. And do you know what we can see? A market showing some pretty big support, 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 support. Ooh, resistance. The market's holding that level. A level that has, yes, I know it broke through it there. They do that, but these markets have memories. The prices have memories. So very often these patterns repeat themselves. What was support there? Believe it or not, can be found again. And that's a number that's automatically generated there back on that rotation, back from sort of early December. And we see it again here, market finding and hitting resistance off those sort of levels. It happens all the time. Here, we're at a market where we found resistance off that same, evidently, quite an important level, 126.35 or so. If the market starts to break down from here, I'm going to be quite interested in it, regardless of whether I've got a sniper on the chart, one of the big discs. I think it could be quite an attractive opportunity. So please keep an eye out for dollar CAD. As it stands at this point, there is no short. There is not an opportunity yet. I'm looking for a red line here on my system to determine. But the context is there. Now I just need to see a little bit of weakness. I want to see that the sellers are in control and win today, if you like. And then I'm going to be much more interested in taking that opportunity. So Michael, quick question coming in through. And don't be afraid to ask questions, everybody. Michael, what do the letters CP mean? Chart pattern. Okay, so effectively, certain opportunities, you will see CP written against a turning point. So if it says CP there, it'll basically mean that it is a descending chart pattern. So effectively, the way in which the market's looking at lower highs, lower lows, and the sort of the complex patterns that we see, effectively the system is looking for the right types of patterns. So if you see a turn down in the market and then you see CP written above it in red, that effectively means it's a turning down. The market's turning down in line with a descending chart pattern that the system's doing. Okay. Saeed, I'm very impressed with your analysis. Thank you. How can we learn like you and take trade decisions? You can join us as a member on our program, and actually I'll put some contact details up a little bit later on. All right. So, but you can go to trend-signal.com and you can register on the website there, Saeed. Or give us a call. Good old-fashioned phone call. That'll work. So, thanks, Michael, for that. That's FX. Let's move on. Let's look at some cryptos. Not a huge amount to go through there, but again, I'm going to keep it brief and focus on what we really need to be looking or thinking about taking action on. It's the big ones actually for me today. There are one or two coming up in the scans, but most of them are short trades, and to be honest with you, most traders are really struggling to be able to identify, and actually not identify, but place short trades. So I want to focus more on the buy side a little bit today. Let's have a look at Bitcoin. Let's have a look at Ethereum, which are rotating a little bit higher at this point. So what I quite like here is, the market, Bitcoin here, daily chart again. It's found support off that 40,000 area. Again, a round number. It's weird, isn't it? The market, it seems to be rotating higher. The CP there, Michael, you can see that the market is in an ascendancy. So this point here is higher than this point here. Do you see? So it's effectively, it's that kind of a thing. And if the market's going to be showing an uptrend, you want to see that, well, you want to be buying a market that is in an uptrend, right? So that can absolutely help us. So for me, I kind of like this. What's happening here? And you'll notice this that happens on the charts, that you get different stages in a market move. Okay, watch this. Okay, you notice as we move from one stage there, that's quite fluid, that move. Let's call that A, let's call that B, and let's call that C. That movement in section B, that's kind of like the sellers are in control, right? There is no conflict between buyers and sellers. The sellers are in control and they're driving prices lower. What happens is around a turning point is that volatility will increase. That conflict, as the price gets up to these levels on the extremes of these price channels, typically the conflict between buyers and sellers will increase. That's why you see this chop, 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 chop happen. Again, here, up, down, up, down. That conflict between buyers and sellers is taking place. That tug of war, that wrestle for it is taking shape. That's what we're seeing here. What we want to see from these opportunities is obviously an ultimate winner. And that's what the turning points are there to spot for us, is when the winner of that tussle has effectively taken place. So that the market can move into a more sort of fluid kind of move and move into that stage B, if you like. What we've got here is a market that's in a bit of a tussle, but now we're starting to rotate back higher again. Again, I prefer to be buying it above 41,643 because that'll be taking out, that really demonstrates to me that the buyers have taken control. But I quite like this as a buying opportunity for Bitcoin. Big discount over the last couple of weeks, so it's fallen about 20%. Quite a big move, really. And you know what? It's looking good to maybe make back around to that sort of 44,000. You can see resistance from the previous level there, around that 44,500. Stop below the low from there. So it's looking like quite an interesting opportunity. Yes, no sniper. The context isn't quite right for one of those snipers, but doesn't mean that it couldn't be quite interesting, really, as an opportunity. So getting sucked up back to the resistance from 44,500 from here. What was that? The 9th of February, 15th of February. Here, the very early beginning of March, that really could be looking to suck the prices up there. Why do we look to enter these only in the evening? And what time? Typically around sort of 9-10 o'clock in the evening. That's UK time, G, because that is an end of day trading system, which suggests end of day. The reason for that is because when you're looking at indicators, G, those indicators during the life of a candlestick. Now, whether you're looking at a 15-minute bar, time frame, an hourly time frame, a 4-hour, a daily, a weekly, monthly, those indicators are still being plotted within the life of that bar, aren't they? So if you're trading on a daily chart, the candlestick is still moving within that day, which means that the indicators are still being plotted according to the movement of that candlestick. Does that make sense? So if you're trading on a weekly chart, it's only at the end of a week that candlestick is set and locked. Okay, it can't change next week because this week has already finished. What that means is that the indicators based on that week's movement are also therefore then set. Now, the reason we talk about trading in the evenings because there's a daily chart at the end of the day. That's when the candlestick is set. It will not move after that. And that means that the indicators that we use, at least anyway, are also set. They are locked. They do not repaint. They do not move after the event. That is how they are. And that's when they are locked. At the moment, it is an indication that prices are rising and this line is green. So it's effectively saying, keep a lookout for this one, G. But if the price were to fall, then this line would go back red again, and therefore there would be no opportunity to buy because we're looking for a turning point. Now you might say, well, that's just repainting. No, the indicators are being plotted at this point. What we look to do is place those opportunities as those indicators become locked. So if this were now 10 o'clock tonight, for example, that will be set. That would not change. Okay, that's it. So that's how exactly there, that sell, that's exactly how it looked at the end of that particular day. And it will not change after that point. Does that make sense? So this is why we look at things. And actually, from a usability perspective, the problem with so many systems is that if you're a part-time trader, like a second income kind of trader, you're busy, you want to look at the markets 20, 30 minutes a day, that type of thing. You can typically look at a certain time of the day, usually the evening, first thing in the morning, that sort of thing. And that's fine. That's what this system is really for. The problem with a strategy where you could get an opportunity coming up at any point in the day is that you're always going to miss trades. So if you're trading off a daily chart because it's the right time frame view and it is the best time frame for most people, the problem is if you've got a strategy that you could get an opportunity at 10 in the morning, 1 in the afternoon, whatever, and you've got to place that trade and be live and ready to place it there and then, that's a pretty horrible system because you're never going to be able to follow it that accurately. Whereas with this, it's about having, you know when the trades are going to come up. You don't know which trades are going to come up, but you know when they're going to come up, so you can allocate your time accordingly. Okay, so it's all about a system or a strategy being manageable, usable, and so on. Okay, so hopefully that makes sense as well. Again, let us know, yes or no, let us know in the questions box if this is all making sense, all clear. That'd be cool. Good, that's Bitcoin. Ethereum's pretty similar, and again, I kind of like to sort of bring this one up a little bit as well. This is a similar sort of one, but you can actually see here. I still like it. I'm happy with it. In the market finding that support off those lows there, bouncing off that level. At this point, the price is pulling back a little bit today, but we've got that green line. It's suggesting a rotation higher in line with the weekly trend. Michael, in line with an ascending chart pattern. Yeah. So we're looking for the market to be looking to rise from here. Not quite the right pattern for us for a sniper disc, but it's okay. I'm okay with it, particularly if I can get a nice strong bar today. If I can close up here, that'd be really juicy. I'll be much happier about that than returning up to around 3,500, going back to those levels that we last saw, a few weeks ago. At this point, that candlestick is still being plotted, of course, and that's why this line is green at this stage. It could be red by the end of the day. We'll see. Depends how today pans out. But it's on my watch list, So it's, as a trader, you don't have to be looking at things at 12:30. I do this just to show you guys what we're looking at. You can then make an informed decision about whether to follow us, whether to join us, whatever. It's up to you. But this is just to give you an idea about the mindset, the day-to-day routines, really, if you like. So that's a little bit on cryptos. Let's have a look at some stocks. A little bit more to talk about there, probably, to be honest with you. So let me just bring in some stocks. We can look at some US stocks. I'm actually going to bring some UK stocks into it today as well, because there's a couple of little bits I want to go through. Let's have a look at the scan. Okay, so we can use scans for all these different systems, but effectively, Momentum Sniper is the strategy. I'm going to look for the S&P 100. Loads actually over the last couple of days, some sort of big turning points, some decent looking opportunities, quite banking heavy. Actually, it's beginning of earnings season, so those of you not so sure, with US stocks, they report quarterly, so they do quarterly earnings statements. So, that's really based on January, February, and March, right? So once you get to the end of March, then that's when they start to then release their earnings data. So you give the accountants a couple of weeks to work out the figures, and then they start to release. So what you have is an earnings calendar where you can see when a company is reporting. Now, this is quite important, particularly as you move into a new quarter, because what you don't really want to be is in a trade over its earnings. We actually saw this in Wells Fargo the other day, where what's happened to my charts there? It was an opportunity which was setting up, but its results were in the next couple of days. I'll actually show you it. I'm not. We talked about it last Tuesday. So WFC, we had a buying opportunity there on the 11th, but its results were within 2 days. So actually, taking that as an opportunity is a pretty risky play. So for me, what you're doing is you're taking on additional risk. When you're looking at trading, you want to be able to trade what is known at the moment, because unless new information comes in, the market is more likely to continue on the path it already was than to change direction. So what could that new information be? Well, there's nothing more important to a company probably than its earnings statement. So, and that is an external factor. That's something you have no knowledge of. Well, probably, I expect not, unless you're insider trading. And then therefore, it's to be something to be sort of, it's a gamble, it's a punt. If the results are better or worse than expectations, you don't know. The reaction of that, you don't know. And therefore, it's best to avoid it because it leads to risk, it leads to slippage, it leads to gambling. I'm not interested in that. The more likely scenario is you take an opportunity just before results and it can have a big skid mark. So if your stop loss was, say, here, for example, you'd be stopped out of the trade there on the open. That's a pretty painful stop loss, more than you would be expecting. It's not the way to trade. So if you're going to trade stocks, be aware of the reporting dates of the stocks you're going to trade. What that does, it allows you to avoid probably more loss-making trades than winning trades. Now, you could say, oh, the stock might have actually come out with really good results and so on. It could have boosted higher. Maybe. But you know what? I'm more interested in a smoother equity curve. The more I'm absorbing and accepting risk into my my life, my trading account, the more stressed out I'm going to be. I could do without stress. I've got 3 boys in my household. They bring me enough stress as it is. Thanks very much. So I'm much more interested in easier life, quite frankly. It's best to avoid gapping stocks. Michael, you're right. The question is, what is a gapping stock? Well, it's likely to gap a stock is unlikely to gap too much unless it's over its corporate earnings, and therefore we're better off looking to avoid it. Okay. Good. Okay. Gary, I was late to the start. When can I see a recording of today's session? It'll be on YouTube and Facebook. It'll be posted up on there a bit later on after, straight after this session, basically. Okay. So if you just look at Trendsignal on Facebook and YouTube, Gary. Right. So, what am I waffling on about? So, we need to look at some of these on here. I'm not going to look at every one. I'm going to look at the ones I'm interested in, okay, and the ones I can really add some value to. Citigroup. Now, first thing you want to do, if you like a potential opportunity, is setting up as a buy sniper tonight. What's happening here? Very much against the trend. You've got an oversold market. The buyers are starting to come into it. This is against the weekly trend, against the monthly trend, against the intermediate trend. It's a bit like, oh, and yet stocks, they do tend to find a way to go higher. Look at the context of the S&Ps, the context of the Dow, the indices themselves. They've been hit a little bit over the last few weeks. Could be interesting down at these levels. And you know what? These banks have had their report. They had their reports at the end of last week. So if I go to my Yahoo Finance earnings calendar, you can all look at that. Hit C for Citigroup. Okay, and you can see the earnings date for that particular instrument once it loads up. There we are, the 14th of April. Was that last Friday or whatever it was? It's had its results. Okay, so that means that it can be a little bit more interesting to trade. Pretty slow, this computer today. What's it doing? Bear with me. There we are. So I'm kind of okay with it as an opportunity. The other thing that I wanted to reference with Citigroup, again, to try and add some value to this, is if we look at this on the monthly chart, let's just tighten that up. We can see support off this level down here. And I know this is going to be kind of tricky to have a look at, but that sort of $51 level, we saw it here, we saw it here, we saw it here, and we saw it here, and we saw it here. So the market is hitting that number and reacting off it time and time again. We are now returning to that level. We hit it a couple of days ago. They've come out with their results. They were better than expectations. The market is starting to lift. I quite like Citigroup down here as a consequence. Now, you could simply take the sniper traders on face value if you want to, but then there's not much point coming to a webinar about that, and learning about it. This is about trying to show you, A, the opportunities are setting up, but also B, try and add some value, get you thinking about these opportunities the right way so you can really look to trade in the right way really as well. Okay, so that's Citigroup. Now, as far as objectives, if you're looking for something simple, go to my general sweet spot for US stocks. It is in that 3 to 5% target level. Okay, why that area? Because that's typically what these markets do within sort of 3 to 4 days. All right, now maybe 7 days. I don't like to be in stock trades for longer than that. I tend to be quite a short-term trader, even though I'm trading off a daily chart. So I don't like to be stuck in opportunities for too long. So you'd be looking at around that sort of $44 to $45. Sorry, $54 to $55 region, moving back up to that area of support that was found back from the middle of March. Okay. Goldman Sachs is quite an interesting one. That's also setting up. When I say tonight, this was last night. Obviously, this is pre-market open, so we have no candlestick for today yet. So this is an opportunity that's set up last night with a view to entering end of last night or on the open today. Again, we can have a look at GS, Goldman Sachs, the ticker. We can have a look at this one and see when it's looking to report. Again, 14th of April, very much banking week last week there. Weird happening with my charts today. Anyway, there we are. So we can see the buy, 330. Quite like it up here. Nice strong entry candlestick. Looking to around 340 as objective. That's about 3%. In fact, it's pretty much bang on 3% for sort of 339, 340 for the target there on Goldman Sachs. The other one that I like, do quite like, is Morgan Stanley. Now, this one set up yesterday. I say yesterday, Friday, sorry. My day's all confused because we don't have a bar for today yet. So there we are. That's that. It's not really done anything yesterday, which is fine. I quite like this one. And again, you've got the context of the sniper. You've got a market that's oversold. It's down here, that green line, it's oversold. The buyers are starting to come back into it. You're bouncing off the extremities of its natural trading range. You've got the sniper there. It's against the longer term trends, but that pattern that we're seeing there is associated with good moves, good, reliable trading opportunities. But again, let's look at context. Look here. Look how the market has found a reaction there, bounced off it. Okay. Results aside, the market has technically bounced off that several days ago, and then it's all gone through. Everything's in the chart. We bounced off that level there. You're starting to see the support around that sort of $83 level. Let's tighten the chart up a little bit further. Let's see if we can build more information here into this. Going a little bit further back here, but do you know what? Here, 83, here, resistance there. These are all that same area, okay? That's where the market's finding a reaction from. Now, you have to be a little bit careful with support and resistance because you can absolutely get confirmation bias where you're looking for reasons to support your own opinion and you'll avoid reasons that dissuade you from something. But what we're just looking for is just a little couple of bits of additional context, i.e. ask the question, it looks like a buy, it looks like this market's going to rotate higher, but why should it go up from here? Those are the questions. The algorithm, the filters, do a lot of that questioning for you. It should go up from here because of X, Y, and Z, and they have historically produced some good trades. You could add on a little bit of discretionary filter, if you like, just by having a look at the charts and saying, well, nice bit of support, nice bit of resistance there. We can use the pivot points on certain of our systems to be able to look at and bring Fibonacci analysis in there as well. Either way, again, I like this as an opportunity for Morgan Stanley. I know that's quite a few banks there. We've got Citigroup, we've got Goldman Sachs, we've got Morgan Stanley, but there's some decent action in there potentially for the buy side. All right. Finally, because I'm going over as I always tend to do. I tend to talk for far too long. There are a couple of stocks that I would like to have a quick look at. UK stocks. Now, we do very much use an element of discretion when we're looking at UK stocks. There's lots that are setting up on the scan. The thing about the FTSE is it's not really had the same magnitude of pullback as the US stocks. So we don't have the deep discount on some of them unless these stocks have been a little bit killed. But what we've got here is a few that are absolutely worth looking at. Let me just go in the scan here. Off the FTSE 350, bear with me. Now, I'm not going to look at all of these because there's loads, but then you wouldn't really look to trade that many opportunities anyway. We can filter, we can go through the ones we like. I wanted to bring in the more popular ones, really. LGen, Legal and General, quite like this one. You're seeing a market that's took a big hit. Then it's starting to rally up, and again, it's finding a decent base around that 270. You're starting to see the market moving. Nice sniper there. I can see this easily coming up to 280 at about 2% there. So keep an eye out for Legal and General there. Ex-dividend this week, it might well be, but shouldn't really. It may well impact it, but maybe you'll receive the dividend. And if it still gets up to 280, with receiving the dividend as well, you're going to be all happy really with it, Michael, won't we? So it might still well get there. We can also have a look at Rio. Another one I wanted to have a look at, Rio Tinto. I don't normally look at UK stocks, to be fair, but this was really my sort of origin where I started. I'm going to say a big no to this one, okay, and that's the reason I'm bringing it up, just to add value. It was a buy opportunity from last Thursday, so you can see it's going okay, and if you've taken it, all it's really good for, I think, is around that level anyway. It's there. If you're buying it here, you're effectively buying it right at the ceiling. So think about how far up it could go. It's already got its head right at the top of the ceiling. Now, it could burst through that ceiling, absolutely, but it could also whack its head on here and it could come flying back down again. So we've got to be a little bit careful. It flew back down a couple of weeks ago. It flew back down last week. So let's be a little bit careful up here with Rio Tinto. It might be there's not a huge amount of value up at this sort of level. It may have already boosted as far as it really could. So just be a little bit careful there. But Legal General, I quite like. Smith's Group, I quite like this one, actually. SMIN, S-M-I-N. We've got an over sold market. So, the buyers wrestling control back. The monthly trend is positive. We got an ascending chart pattern. There's a few things in here. You're starting to see that trend start to break back up again. So it's a buy sniper with the longer term trend of the market. You're starting to see the market move into ascendancy with a higher chart pattern. In other words, if you're seeing the market break like this, at some point it's then going to start to go here like this. You'll start to see that high, but then you'll start to see higher lows. In order for it to move into an uptrend, you're going to start to see higher highs and higher lows. This is arguably what we're seeing here. That there is effectively what we're seeing there. Is this then going to rally to new highs? It doesn't have to rally to new highs. I'm pretty happy with it to get to around 1500, to be honest with you. But it's starting to build a potential for a change in direction back up again. So that's the context for that. We'll see. Quite like it though. I remember I used to trade a lot of UK stocks, probably about 15 years ago. I used to trade SMIN all the time. I don't know why, but it always used to behave relatively well. It used to be a decent amount of movement in it. Quite liked it. And then finally, Lloyd's, LLOY. Similar in a way, you're seeing a market's ratcheting its way back up again, positive chart pattern, oversold market again, so keep an eye out for that one, probably around that's at 47 sort of pence again, looking to that recent level. Okay, so Lloyd's, people always like Lloyd's because it's quite volatile. There's always a decent amount of movement in Lloyd's. Movement means opportunity, means potential for profit, so keep an eye out for that one as well. So do we trade a lot of UK stocks? You need to have that little element of selectivity, little element of discretion. With US stocks, they tend to be much freer flowing. You don't need you don't have to use discretion with US stocks at all. From the bigger ones, not from the data analysis that I look at. However, when it comes to UK stocks, just have that little element of discretion there. It can help you to choose which opportunities to prefer to take, and that can help you to much smoother outcome for your trading as well. So otherwise, there's a few in there, aren't there? Some financial stocks there, Smith's Group as well, and of course a few of those FX pairs as well. But hopefully that's an interesting session for you. I'm going to call it an end today, an end to the session there, guys. If you like these sessions, let me know. Give me some feedback into the chat box now or into the questions box. Did you like today's session? What did you find useful? What would you like to see more of in these sessions? That'd be useful. I've been doing these Trendsignal live sessions for about a month now, every Tuesday lunchtime. So if there's something else you want to see, something more you want to see, then please absolutely let me know, because this is all about trying to add value and trying to demonstrate to you what can be done, but also what can be done from trading whilst breaking down the complexity of it as well. All the best, everybody. Have a wonderful week's trading and catch you soon. Bye-bye for now.